The year was 2010 and I was watching this documentary called An Inside Job, in which there's a clip where Hank Paulson, the US Treasury Secretary at that time, made a statement that still haunts me. There is not a single bank in the world that has enough money in its vault to pay its depositors. While he said that in the context of the great financial crisis of 2008 and the impact on interbank lending and the possibility of a bank run, it was this quote that made me go into the rabbit hole of how modern banking actually works and how banks, in a way, create money. Later, I was watching another documentary where a quant trader named Chaim Bodek discovered that stock exchanges were selling order flows to high-frequency trading firms that retail investors didn't have access to. Now, I'm not trying to say that the market in this context, the US markets, was kind of rigged against retail traders, but in a way, it was rigged by design. That is, the whole process of rigging was built into the infrastructure. Now, these aren't stories from novels, these are real events, real money, real consequences, and some of which I learned watching a few documentaries. Now, if you remember, towards the end of the last year, I did an episode recommending movies based on finance and investing. At that time, I deliberately left out documentaries because I felt they deserved an episode on their own. You see, movies and documentaries may revolve around the same events, but they are trying to achieve very different outcomes. Movies entertain first and educate along the way. Documentaries do the opposite. They focus on telling the story as it happened, and if there's one thing I've learned over years, it's that financial markets have produced enough unbelievable stories that they don't need any Hollywood exaggeration. Also, while movies tell an interesting story, documentaries tend to go beyond just the surface. I'm your Sandeep Rao, and today we are stepping away from the theaters into the world of documentaries to look at markets through the lens of reality. Before I get started, here's what you can expect from this episode. I've grouped these documentaries into 6 broad categories, each looking at financial markets from a slightly different perspective. I'll begin with the global financial crisis of 2008 because I really believe it is one of the most important events anyone interested in finance should understand, especially in our generation. From there, I'll look at how modern markets actually function through documentaries on high-frequency trading and market microstructure. The third category is about legendary traders and the role of risk management in trading. The fourth category focuses on fraud, Ponzi schemes, accounting scandals, corporate deception, all of that. After that, I'll come back to India and look at a documentary based on some of the biggest financial scandals closer home. And finally, we'll end with a documentary that, in a way, is the complete opposite of everything we've seen until then. After an episode filled with greed, leverage, manipulation, financial crisis, I thought it would be fitting to finish with someone who built extraordinary wealth through patience, discipline, and long-term thinking. So in all, I've picked 12 documentaries. As with the movie episode, there won't be any spoilers. My goal is to simply tell you why I think each one is worth your time and what I personally took away from each of those. With that, let's begin. If you've been investing only for the past 5 or 6 years, then there's a good chance that 2008 feels like distant history. Today, when you hear terms like subprime crisis or quantitative easing or credit default swaps, it may sound like financial mumbo jumbo to you. But unless you've spent time understanding this period of history, it's hard to put today's market in perspective. For me, the GFC, which is Global Financial Crisis, is probably the single important event in modern financial history. Apart from bringing down banks and crashing stock markets, it fundamentally changed how central banks operate, how governments respond to financial crises, and how investors think about risk, or rather, how we as investors and traders should think about risk. Many of the policies we take for granted today, from aggressive liquidity injections to coordinated bailouts, all have their roots in what happened during those few months in 2008. I picked 3 documentaries in this category because each tells a different part of the same GFC story. One explains why the crisis actually happened, another takes you inside the rooms where impossible decisions were being made, and the third is a reminder that even the smartest minds in finance can get risk really, really wrong. Let's start with what I think is the best documentary ever made on the subject. If you never watched a documentary on the global financial crisis before, I'd strongly recommend starting with Inside Job. When people talk about the 2008 crisis, sometimes the conversation usually starts and ends with just about some greedy bankers who started it all. But Inside Job argues that the reality was far more nuanced and complicated, which it was. It shows us how investment banks, credit rating agencies, regulators, policymakers, and even parts of academia all played a role in creating a system where excessive risk was actually rewarded. What I particularly liked about this documentary is that it doesn't assume you have a background in finance. Complex topics like mortgage-backed securities, leverage, securitization are explained in a way that's fairly easy to follow, while interviews with people who actually lived through the crisis and made decisions during the crisis add a fair bit of credibility to it. For me, the biggest takeaway wasn't that there were parts of the industry which got greedy. Markets always have been about greed. For me, the most important lesson was how dangerous and misaligned incentives can become if they're allowed to persist for years, especially without any oversight. If you just want to watch one documentary from this entire list, I'd say this would be the one. Now, if you watched Inside Job, then I would recommend following it up with Panic. The two documentaries complement each other quite beautifully. While Inside Job explains why the financial system broke, Panic focuses on what happened after it broke. The documentary is built around interviews with Hank Paulson, Ben Bernanke, Tim Geithner, and several others who found themselves making some of the most consequential financial decisions in modern history. Looking back today, it's easy to say Lehman Brothers should have been saved or AIG should have been allowed to fail, but Panic reminds us that none of these decisions were obvious at that time. Every option carried enormous consequences, and policymakers were effectively trying to prevent the global financial system from collapsing while making decisions in real time. You see, the Inside Job gives us what happened and why it happened. Panic tells us what was happening in the emergency rooms as this particular crisis was unfolding. The last recommendation in this category actually takes us back almost a decade before GFC. And yes, depending on where you look, you will find this documentary under two different titles. The Midas Formula 1999 or the $1 Trillion Bet 2000, they are actually the same documentary. And yes, if you ever traded options, chances are you come across the Black-Scholes options pricing model. It's probably the single most influential equation in modern finance, and it obviously earned Scholes and Merton the Nobel Prize in Economics. This documentary tells us how that breakthrough changed Wall Street forever. Now, all of a sudden, the concept of risk became something that could be modeled, measured, and priced mathematically. And that idea eventually led to the creation of a company called Long-Term Capital Management, or LTCM, a hedge fund founded by some of the brightest minds in finance. The fund used sophisticated quantitative models and a fair bit of leverage to exploit tiny pricing inefficiency across global markets. For a while, it looked like they had cracked the code and they had the holy grail. Then came the 1998 Russian debt crisis. Markets behaved in ways that models hadn't anticipated, and the LTCM collapsed so spectacularly that US Fed Reserve had to coordinate a rescue to prevent wider damage to the financial system. As someone who spends a lot of time thinking about systematic trading and trading options, I found this documentary fascinating because it highlights both the power and the limitations of pricing models or financial models. You see, models are incredibly useful, but they're only as good as the assumptions they are built on. And when those assumptions break down, markets have their own sweet way of reminding us that reality, as always, is far more complicated than those elegant models. The next category is probably the most niche of this list, but it's also one that I personally found most eye-opening at the time I had watched it. While most of us spend our time analyzing charts or backtests or company fundamentals or macroeconomic events, depending on what kind of a trader or an investor you are, but I think a very few of us stop to think about what really happens the moment we click on the buy or sell button. How does an order actually reach the exchange? Well, I made a video on that one in case you're interested. And who gets to see that offer first? How is it really matched? And do all the entities play by the same rules? These documentaries explore exactly that. They pull the curtain on the infrastructure of financial markets and show how the rules are different depending on who you are. If I had to recommend one documentary for anyone interested in market microstructure, it would be this one. The documentary follows Chaim Bodek, a former high-frequency trader who accidentally discovered that US stock exchanges had introduced specialized order types that gave certain trading firms an advantage over everyone else. Now, these weren't illegal. They were so complex that very few participants even knew that such a thing existed. One of the fascinating things the documentary explores is how exchanges slowly transformed from neutral marketplaces into businesses competing for order flow. In that competition, exchanges began creating increasingly sophisticated order types and execution mechanisms to attract high-frequency trading firms. The result was a market that became incredibly efficient, but also incredibly complicated. If you read the book Flash Boys by Michael Lewis, many of the themes will feel familiar because both revolve around the same period in the market history. In fact, Chaim Bodek's work played an important role in bringing many of these issues into the public domain. For me personally, this documentary completely changed the way I thought about exchanges, order flow and all of that, especially a decade back. We often assume that markets are simply buyers and sellers interacting with each other, but once you understand the whole thing, plumbing, which happens underneath, you realize there's an entire system working in the background. And it reminded me of this tweet where Nitin says, in a way, the Indian exchanges and regulations are far more fairer for the retail investor as it doesn't allow order flow information to be sold. As traders at the moment here in India, we may not be affected much by these things, but understanding it certainly makes us better and more informed participants. If the Wall Street Code shows us where markets are headed, Floored tells us what actually they left behind. I mean, what was happening before all this technology came in. This documentary follows traders on the Chicago trading floors during the transition from open outcry to electronic trading. For decades, these pits were where some of the world's largest futures and options contracts were traded. Orders were shouted across crowded trading floors, relationships mattered, and experience often counted as much as technical skills. Folks like Tom Sosnoff, who was on our podcast, traded exactly in this exchange, and he had some interesting anecdotes to share. Then sometime in 1990s came electronic trading. Algorithms could execute faster, more consistently, and without human emotions. Within a few years, an entire profession that had existed for generations began to disappear. What I like most about this documentary is that it captures a fascinating moment in the financial history when one era was ending and another was just beginning. Watching traders adapt or struggle to adapt to that change reminded me that markets and the world around us is constantly evolving, and what works today may not work tomorrow, and we need to change too. The next category is probably one most traders would enjoy. Unlike the previous documentaries which focus on financial systems, institutions, crashes, this one is about individuals. One thing I've realized over years is that traders who survive for decades aren't necessarily the ones with the highest returns. They're usually the ones who understand risk better than everyone else around them. They know when to be aggressive and when to cut losses short, and perhaps more importantly, when not to trade. I have only one documentary in this category, and it gives us a rare glimpse into the mind of one such trader. If you spend any time reading books on trading, you'll most certainly come across the name Paul Tudor Jones. He's regarded as one of the greatest macro traders of all time, and trader is one of the very few documentaries that lets you watch him think while he's actually trading. The documentary follows Jones in months leading up to the 1987 Black Monday crash, when the Dow Jones fell more than 22% in a single day, the largest single day percentage decline in the US stock market history. What's interesting is that Paul Tudor Jones had positioned himself for exactly such an event and ended up making one of the greatest trades of this history in this crash. But what makes this documentary worth watching isn't the whole prediction of the crash. It's the way he thought about markets. Throughout the film, he talks about preserving capital, staying flexible, managing risk, all of that. So there's this famous line where he says, don't focus on making money, focus on protecting what you have. I think that's one of the most important lessons for any trader to learn. One small caveat though, this documentary is surprisingly difficult to find because of licensing issues, but if you do manage to get hold of it, it would be well worth your time. The next category focuses on something that's unfortunately as old as financial markets themselves, and I am talking about fraud. When it's a Ponzi scheme, accounting manipulation, or some kind of a corporate fraud, the details may change, but the underlying pattern always remains very similar. A compelling story, unquestioned optimism, lack of transparency, and eventually reality catches up. The 4 documentaries in this category all explore different versions of such a story. When people think of corporate fraud, Enron is usually the first name that comes to mind, and for good reason. At its peak, Enron was considered one of America's most innovative companies. Analysts loved it, investors trusted it, and business schools studied it and wrote cases about it. Behind the scenes, however, the company was using increasingly aggressive accounting techniques to hide debt and inflate profits. One concept you'll repeatedly hear about in this documentary is mark-to-market accounting. In simple words, Enron was booking profits that it expected to earn years in the future as if they had already been realized. That made the business appear far more profitable than it actually was. The documentary also highlights the role played by Arthur Andersen, one of the world's largest accounting firms at the time. And it serves as a great reminder that corporate governance works only when every gatekeeper does their job properly. What I found most fascinating is about how long this whole illusion and fraud survived, in case of Enron that is. Thousands of smart, intelligent people looked at Enron, analyzed Enron, and believed everything was perfectly fine till the time it wasn't. For me, that's a lesson that goes well beyond financial markets. As they say, if it's too good to be true, it probably isn't. The next documentary explores a very different kind of a fraud, something that probably has been erased from our memories already. During 2000s, dozens of Chinese companies found their way into the US stock exchanges through a process known as reverse mergers. It was faster and easier than a traditional IPO, but in many cases, investors discovered too late that the underlying businesses weren't nearly as great as they appeared on paper. What makes this documentary interesting is that it's told largely through the eyes of short sellers. These are investors, or rather speculators, who actually benefit when they uncover fraud, and the documentary gives you a fascinating look at the investigative work that goes into proving a company isn't what it claims to be. If you ever wondered what serious forensic research in financial markets look like, this documentary is an excellent place to start. The next documentary is slightly different because, unlike the others in this category, the story in this one doesn't end with someone going to jail or a company collapsing. Betting on Zero follows the legendary hedge fund manager Bill Ackman and his billion-dollar short bet against Herbalife. You see, Ackman publicly argued that Herbalife was operating as a pyramid scheme and backed that conviction with years of research, presentations, and regulatory complaints. On the other side of the trade was Carl Icahn, another legendary investor who took the exact opposite view and built a massive long position in the company. To me personally, what makes this documentary super fascinating is that the two of the world's most successful investors looked at the same data and reached completely opposite conclusions. Whether you agree with Ackman or not, the documentary is an excellent reminder that investing is rarely a black and white thing. My personal takeaway from this was that many of the biggest debates in markets don't really end with a definitive winner. The final recommendation in this category is the fourth episode, season 1 of Netflix Dirty Money series called Cartel Bank, and it's probably the most frustrating documentary on the list. It tells the story of how HSBC, one of the world's largest banks, was found to have processed billions of dollars linked to Mexican drug cartels and other criminal organizations. The investigations uncovered serious failures in the bank's anti-money laundering controls, raising obvious questions about accountability. Now, what stayed with me after watching it was one, obviously the scale of the problem and the outcome. Despite everything came to light, the institution survived, paid a massive fine, and moved on. It raises an uncomfortable question that comes up repeatedly in finance. When an institution becomes large enough, does the system treat it differently? In a way, it's a fairly sobering documentary and a reminder that financial markets don't operate in isolation. They are deeply connected with politics, regulation, and the broader economy. While I do recommend Cartel Bank because it fits the theme, but I'd actually suggest watching the entire Dirty Money series across its 2 seasons. Every episode explores a different story involving corporate crime, financial fraud, and abuse of power. Not all of them are market related, but almost all of them are fascinating, and I think it's one of Netflix's better documentary series. And that brings us to the fifth category, and for this one, we don't have to look halfway across the world. India had its own share of financial scandals, and many of which reveal the same patterns we've already seen. Crazy ambition, regulatory gaps, and systems that were easier to exploit than most people realized. After spending most of this episode talking about Wall Street, I thought it would be great to come back home. The only India-specific recommendation on this list is Netflix's Bad Boy Billionaires India. Technically, it's a docu-series rather than a feature-length documentary, but it's simply too good to leave out. The series tells us the stories of 4 high-profile businessmen, Vijay Mallya, Nirav Modi, Subrata Roy, and more recently, Ramalingaraju of the Satyam scam. What I liked most about the series is that it goes beyond just the headlines. Most of us know these names and broadly know what they were accused of. But the series takes you through how these businesses were built, how confidence gradually turned into perhaps overconfidence, and how systems that appeared perfectly normal for years eventually began to unravel. One thing you'll probably notice by this point in the episode is how similar these stories are to the ones that we've already seen. Now, whether it was Enron or Bernie Madoff's Ponzi scheme or the scandals we witnessed here in India, the details may differ, but the underlying pattern rarely changes. It usually begins with a compelling story followed by great success, and that builds some kind of an unquestioned trust and eventually a point where reality actually catches up. I think that's one of the biggest reasons we should watch documentaries like this, because they help us understand, recognize such patterns. And once we learn to recognize such patterns, I think we become much better investors. Now, this probably isn't a more fitting way to end this episode than with becoming Warren Buffett. Unlike most of the documentaries we've covered so far, this one isn't about a market crash or a financial scandal or some blow up. It's a look at Buffett's life, his approach to investing, and the principles that have guided him over several decades. Now, I'll admit I am not really a big Buffett fan, nor am I a Buffett style investor. My approach to markets is very different, and that's fine. But I still think there's a lot to learn from the way he thinks, whether it's staying within your circle of competence or being patient when opportunities are scarce, or making decisions based on logic rather than emotions. Many of those principles actually apply regardless of whether you are a long term investor, a swing trader, or even if you are a systematic trader. What I also appreciated about the documentary is that it focuses less on stock picks and such and more on his temperament. And Buffett actually says that investing isn't an IQ game beyond a certain point, it's about having the discipline to make sensible decisions consistently over long periods of time. And I think that's true for trading as well. And that's a lesson I think which is relevant for every market participant, irrespective of whether you are a trader or an investor. And after spending time writing for this episode and thinking about leverage, fraud, speculation, and financial crises, I really wanted to end with a documentary that reminds us that there are many different ways to succeed in financial markets. And while Buffett's approach may not suit everyone, but the importance of discipline, patience, and clear thinking is something very few people would disagree with. And before we wrap up, there are a few more documentaries that I really enjoyed but I couldn't include in the main list. Rather than making this episode even longer, I put them up on the screen as honorable mentions. If you already watched the 12 we've discussed, these should keep you busy for quite some time. And that brings me to the end of this episode on documentaries. 12 of them grouped into 6 categories, and take your time to watch them. And yes, I'm personally more of a documentary person, so I prefer to see things without the Hollywood gloss, and that may be one of the reasons why this episode turned out to be a long one. And yes, that brings me to the end of this episode on documentaries. As always, if you enjoyed this episode, do share it with someone who you think would find it useful. And if you haven't already, hit that subscribe button so that you don't miss the next one. I'll see you in the next episode. Until then, take care and trade safe.